Welcome back to another edition of Chart the Markets. I am Mark from Blunhouse Technical Analysis, and I'm here with my friends from FEG Token and SmartDefi.com and our exchange partner, BYDFi. So if you want to head over to BYDFi.com and enter the code capital K, 5, capital Z, 4, capital T, lowercase p, sign up, grab yourself a new account, and you're going to be eligible for some trading bonuses, one of two that we will give away every session with new signups. So head over there and grab your account. Let's get into the charts though, because that's why we're here. And welcome everyone. And I think what you're going to see is a lot of examples of what we've been telling you to be aware of over the last several weeks. Has price gone up? Sure, but let's add a little bit of context to this chart. And the way that we look at the chart is that look, we want to trade the breakouts and the breakdowns on the time frames that we're targeting. When we look at this daily, however, we've been trying to point your attention to one thing in particular, and that is that pink level there, which is the 500-day SMA. So that's 500 days of price history on that time frame. And what you're seeing, and you're going to see a lot of today, is what happens when what was once support becomes resistance. And we've been talking in this stream and in my Telegram group about what can we expect? Is this the bottom? And so on and so forth. And the warning has been, be careful until price can trade above this level, which is the 500-day, with some meaning. And right now, you can see that, when support becomes resistance, it takes a while. You have to change your mindset on how you approach the chart. And because you're going to be coming off a period, right, where, things just always went up. Hey, this is the bottom, so we're just going to V-shape and skyrocket and take out, new highs. Well, it doesn't really work like that. Everything is a bit of a process. Nothing goes straight up, nothing goes straight down. Right? If you believe math is a language, then this is a derivative of mathematics, and it's a language unto itself. So all we're doing is we're just trying to interpret what the chart is telling us, because we're only interested in what price does, not what people say, right? And this is a good example of why, because there's been a lot of mistakes in here, people thinking this is a breakout, and that's not necessarily confirmed yet. We've been warning about this level for quite some time. But this is just a simple matter of breaking one level and finding a next. That's how this whole thing starts, right? Let's just throw them all on here. Break all this. All these things twist together. You know that whatever comes out of it, is up or down, is going to be somewhat momentous. And that's kind of what happened here. Right? You broke one level, you find the next. You break one level, you find the next. And now all of a sudden, as you're trying to recover from that capitulation, for lack of a better word, you can see that price struggles. But we believe in fractals, right? Everything is fractal. We can see, we can take a monthly chart, open up that candle in the sense of a weekly, and see inside that candle. And we can do the same with the daily chart. But let's just go the other way for a second, because when we look at this, we've broken all these levels, and now we've broken a significant one. Theoretically, we should be looking for the next eventually. And it could mean that we challenge this level yet again, or maybe we even challenge the 50. And when we do, it'll be a first touch, and then that'll be a rejection. And we've kind of mapped out, and go back in the streams, you'll see when we did this quite some time ago on this particular chart, this range in here. But like I said, I want to go a little bit longer look. So let's look at the weekly. That's what we were capturing within this range. We were looking at the weekly chart, and we're just picking up tops and bottoms, just trying to line up as much as humanly possible, because we understand that, you know, current price is always looking for past price. All right, but let's add even a little bit more context. And we're just going to throw on our script for a moment, because what it's going to show us is how to interpret the bullishness or bearishness of each of these moves, and when it's safe to go back in the water. Right, I'll just turn it off for a moment. Right. It's nice to have some sense of rhythm, but there's more that we can tell than just by looking at the straight candles. And what we can take away by using our script, by installing the T-line and the 5 EMA, is it gives us a bit of a momentum meter, for lack of a better word. Right? We know that when there's divergence between these levels, and this is the weekly, that there's momentum to the downside. And do you remember in the last stream we talked about, okay, is this just the first wave down on the weekly chart, which gives you a little bit of a retracement higher to test? And you can see you tested the 5 EMA and completely pulled back, didn't test the T-line yet. So is this the first wave down? Get support right here at the 100, right? Break one level, find the next. And then this is just your first retracement higher. That's what we were trying to prepare people for. That's potentially, that was the setup. Down, failed breakout, roll over, do what? Take out the previous wave's lows. Everything's fractal. I'm not sure if Rico's here today, but if he was, he's going to say, uh-oh. And the reason he would is because, you know, he pointed out a long time ago that back here in April of 23, on the monthly Bitcoin chart, you got a buy signal. So all you had to do was just buy that. And that monthly chart showed you that even with all the volatility that we go through up and down, the trend higher had not been broken until up here. And this is your first sell signal that the monthly chart has produced since April of 2023. Now, does price break the 20? We don't know yet, right? We still have some time to go. It could bounce here. It's the first touch, so you know we would expect it to bounce, or at least get a little bit of support, which it looks like that's happening. But if it was to break, what happens? You're going to start looking for the next level down. And what is that next level? It's a concentration of that past price we always talk about. You know, that area where buyers and sellers have shaken hands in the past. Maybe even had a beer. I don't know. But that's what price wants to do. So you can see the risk on the chart is, you know, if you're long, is that you break the 20 and you start picking away at lower levels. Right? So we're not out of the woods yet. This is the upper value range, which puts everything above it, kind of think of it as a little bit of a premium. And this is all light trading, right? This is the density and the volume profile. This is light trading. These gaps, we know that price can shoot up and down through them quite quickly. So the risk on the weekly is that if you come back to this level, which is the 100 MA, this purple, and you fail it because, you know, you'd be retesting it, it's kind of the back test. And if you fail it and you fall into this gap, you can see how this level would be drawing price. And in here is your 200 MA, the most basic bull bear indicator that we have. And that 200 MA, you know, this is a matter of time and price coming together, and it may find itself somewhere in here. And why is that a logical spot? Because this shelf is what price would rest on. That's the past price where the buyers and sellers have shaken hands in the past. That's how that shelf gets created. And you would hope, if this scenario does unfold, that you get support from the 200, obviously. Because we don't want to start looking at, you know, you can see why that's in play on the monthly. It's a big fall for sure, but I think this thing has showed you that it can do crazy things. It may not stay in places forever, but it can certainly go there. But that is a big dip. But that's the past price that current price would be looking for. All this stuff. So this is going to get interesting. And I think what we've all been looking for is, hey, is this just going to finally show that it's got something in it to, you know, turn this trend around? You know, and we keep getting a little bit disappointed, and it's starting to feel like, 4 or 5 years ago when we had that big fall from 60 some odd back down to 30. It's starting to feel like that a little bit. I'm not trying to be negative. I'm just saying that's the spider senses are starting to feel that. Here's the 20 MA. We talked about this. If we get rejected here, we're going to come back to the next level, and here we are. You break that, and we know what happens. Failed breakout, come back, take out the previous wave's lows, or maybe even this one, I think. Right. That's what we have to look forward to. The ETH chart is actually really, really clean and clear right now. That's the daily. Upper value range, point of control, and there's the lower value range. Here's all your dense trading. Here's your, price trading well above all support. Right? So this is what happens when you're trading above support, right? Doesn't feel like you can do anything wrong. Look at the divergence between the T-line and the 5 EMA, showing you how much momentum is in this move to the left of your chart. Here, you get a nice green candle off the 50, break the 500 MA daily, but you don't go anywhere. You go sideways for a few days. But when we see that, and we see that this divergence is still open, that's bullish. Right? This is why trading, we don't want to make short trades when price is doing this on the north side of the T-line and the 5 EMA. That's not good for your health. Right? So, we have a tool to measure this, and we have a methodology that proves itself correct repeatedly. Do we like green candles at the 50? All day long I'll wake up for those. All this divergence is telling me I'm good to the upside because the momentum is there. Nothing goes straight up, nothing goes straight down. Eventually you get retracements. That's all this is. Price pops higher. You break the 20 again, 20, 20. And now all of a sudden you start going sideways. And you'll see this, like, you won't forget this chart. I'm pretty sure you're gonna remember it from this point forward. But when you start going sideways, have you ever heard the expression, and I don't know if it was Mark Twain or who it was, but it was, how did you lose your money? Slowly at first, then really, really, really fast. Here's the slowly at first part, slightly lower highs, and then here's the really, really, really fast. You can't be in denial of what you see on your chart, right? But the takeaway for you is that everything that we talk about, as simple as it sounds, is incredibly easy to execute. And how price behaves is just simply a process of just repeated behaviors that have been proven correct over time. So as you break down, what do we not want to do? We don't want to break the 50. I hate that. That's the ice failure, right? The ice hole failure. This is right at the 50. But this is just it's like the evolution of a breakdown. Test and fail, test and fail, test and fail. No, again, test and fail. This is another failed breakout. What do? You roll over, take out those previous waves lows, and the beat goes on. In all of this divergence between the T-line and the 5 EMA, we're just simply saying you're okay. Right? Like, these are the breakouts and breakdowns that we love. Right? So we have that as a tool, but what else do we know? we know that first touches of resistance have a higher probability of failing. Right? That's kind of just the way it is. First mouse gets the squeeze, the second mouse gets the cheese. Here's a touch of the 50, fail. Another touch of the 50, fail. Like when you fail these key levels repeatedly, you can't think that, each and every time it fails and then shows a base or, a handful of candles upward, that it's the bottom. Like, change the mindset, right? Change the mindset. Because now you're in a situation where everything above you is resistance. And you're going to have to retrain your brain a little bit to get to the point to understand that the likelihood of price going higher is less than the likelihood of it falling, as you can see. The only thing that matters is price on a chart. Right? What we think and feel and all that kind of stuff is really irrelevant. Here's your weekly. Is this a little bit ugly looking in a sense? Yeah, but you know what? You still get the signals that you need. What happens when the 5 EMA turns white on our script? It's telling you that money's coming in. There's your entry candle. At some point during that week, as you're pushing through the T line and the 5 EMA, you're gonna enter that trade and feel good about it. Would you know that the 50 is up above you? Of course you would. And you realize that's the risk on the chart, a failure of the 50. Right? That's what you'd be looking at. Those big wicks being forced down. At any time in here, do you have, even with this big red candle, did it change the trend? No, it didn't. And then what happens? Well, hey, there's the 50, and you've been told that the trend was still up, and then wham, big green candle. The beat goes on. Right back to, because we know that the horse doesn't like to be too far away from the barn. Right? Parabolic price pulls you away from levels that price is typically comfortable trading near. It doesn't matter what it is. In this case, I'm using the 20. Some people will use the 21 EMA. Whatever it is that you want to use that works for you is totally fine. But, here I am using the 20. So I use simples with the exception of the T line and the 5 EMA. All that divergence is telling you you're good. You knew you were going to eventually come back to the 20 and test it. When it doesn't hold, and you were kind of told on this green candle here, and the fact that it's green is really irrelevant. What's important is that you began trading below these levels, and you had enough consolidation that brought them together. So all it took was, obviously being a bit overbought and that level of trading pulling the 5 EMA down through the T line, and then it triggers everything off, and that's the sign that the market's going the other way. Are we still bearish? Yes. These are just simply three, we showed this on the other chart, these are 3 green candles in a downtrend that every time they hit a level, they pull back. So if I'm looking at this chart, I'm still interpreting it as being bearish. Would this be the first touch of the 20 if you were to tag it? Yes, you'd be inclined to fail that, right? Higher probability anyways. And if we look at our volume profile, and this is why I like to use the volume profile, it tells you where the volume, the trading has and has not been. And the reason that's important is because that concentration of volume or lack thereof, just think of it as people trading money back and forth. Those concentrations create areas where, like this, where there's a high density, and then areas like this where there's low density. And if you think of these candles that created a lot of these gaps, they're just full of fairy dust and air. Price went up, yeah, but there's really no substance to them, right? It's like that person that you see that they might, kind of look nice, but my goodness, don't open your mouth, right? Because there's not a lot going on. Well, here you go. That's what these candles are. The red ones or the green ones, it doesn't matter. They're just filled with fairy dust and air, and when they come back and get retested, that's what happens. And they create these gaps, and these gaps allow that to take place. So if we fail this turns out to be a failed breakout, and again, we're going to be able to come back and check, is next week's candle going to start to roll over? And a couple weeks later or a week later, we're going to be saying, hey, here we are, have taken out that previous wave's low again, and then we know this is the first leg down, slight retracement higher, then we got wave 2 down, if you're into that. Where does this, if this does roll over, there you've got the point of control and the 200 MA weekly on this chart on ETH to be drawn to. And we know price likes to go where it's been before, and this is why I say, that's 2,500. If you go to the daily, the POC is 2,500. So on both time frames, daily and weekly, the point of control on the volume profile is 2,500. I believe that eventually that will be a draw. And look what's happening at the 50. If you were to see, we talk about these candles all the time. These doji candles at the top of these legs higher at significant and important levels of resistance, pay attention to them. Because if something's going to happen, it might likely happen in those areas, and that's what's happening today. Does this failure kick off another leg down, as we see here? We're going to find out. We know that we have to hold the T-line. We also know that if we fail this level, we're going to come back to the 20 and or the 500 down here and hope you get support and a little bit of a bounce to retest again. But if you fail, look out below. There's 1,000 days of price history where price is already tagged. It'll want to come back there. Not saying it's going to stay there, but it will want to come back there, being drawn to past price. And I do want to give a quick example of that. Let's go to, for 1 second. I know I've got a lot of Bitcoin charts here. I'm going to take all this stuff off for a moment. Now, a while back, we were trying to demonstrate how this whole current price revisits past thing actually works. And, we rolled the dice and we started to put levels down back here. And yeah, we've been doing this kind of thing for a while. As soon as we've had the ability to connect these two levels, we dropped a line in. As soon as we could kind of start to connect the tops and bottoms in here, we did the same thing, and we did it a long time ago. And simply trying to demonstrate how price will respect these levels of where it's been before. And once you understand that, it's not really accidental. It's just simply, like, we're not playing pin the tail on the donkey or anything, but again, the point is to demonstrate how these levels that we achieved a long time ago come back into play. So we're just looking, primarily at this retracement now, only with the levels that we had put on our chart from previously. That's it. That's all we've done. And it's kind of remarkable how these areas that we've laid out act as support, and resistance without anything else on the chart. So if you're thinking that, hey, that was months and months ago, it doesn't really mean anything in today's trading. Want to bet? Because it does. And it just gives us another layer of context, right? That's all it's doing. This is one of our other Bitcoin charts we were using as an example. Same thing. What do these look like on our weekly charts? Well, take a little bit of the noise out on the weeklies, but you can see how respectful price is of those levels. And it just helps you as you're trying to manage your trade. It gives you some context of what's going on the chart. That's all we're trying to do. And that way, you don't have to be, in days like this or times like this, be concerned about what the heck is going on the, in the market. What's going on in the market is actually really clear. Current price is just revisiting past price. That's all that's going on. It's as simple or as complicated as that. What's making it look for past price to the downside, to me, is irrelevant. I don't care. I don't care. I'm indifferent to price. I don't care if it goes up. I don't care if it goes down. Because it's just a chart. That's all it is. All I know is this was really toppy up here. You're talking about all-time highs. And how often do we see candles like this, these little train tracks, with two equal bottoms or two equal tops that trigger off a move up or down? Well, that's what we had here. We could have waited a week for confirmation. Fine, that's respectful. That's the respectful thing to do. You're following the rules. So what triggered it? I don't know. Don't know. So all I know is that we had several weeks ago our sell signal. And at this point, being short, do you really care why everyone else is having this infinite conversation about what price is doing, where and when? I could care less. I'm interested to talk about the charts, but I don't care about the reasons why. I'm indifferent to all that stuff because it's just noise. It's just noise. Weekly sell signal. Okay, I'll take it. I'm not going to argue with the chart. This downside risk that we talked about up here was moving through this quickly because it's not dense, it's very light trading. Price will be drawn to the upper value range, which it was, with the fear that if it doesn't hold it and falls into this gap, you move down. Not really a complicated thing. We're not talking about who's going to use it as a currency, what happened here, there, and blah, 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 blah. Who cares? At the end of the day, all that matters is, can you monetize the chart? Because as a trader, that's your job. Monetize the chart. Right? Let's look at XRP because we have a very similar kind of situation. There's that kind of sideways consolidative action, and then you fail it. Where did you fail it? Right at the point of control, and then you break all these levels, and slowly, because nothing goes straight up, nothing goes straight down, they don't make it that easy for you, but slowly, price worked its way trend-wise to the downside. Finding resistance at expected levels. Not really a lot of surprise in here, right? Why did we drop that 215 in here? Simply because we were connecting past price, because we believed that price would find this level, and it did. Why did we drop this level down here? Same reason. Did price find it? Yes. Let's look for the next level now, because if we come back and we take out this low in here, then, well, it puts all this in play. And there's another level down here that already has been tagged once. But the noise, take the noise out with the weekly. And you can see there's not really a lot to argue here with what's happening on the chart. Like, it just isn't. Right? It just isn't. You know, so however you want to draw this level, that's what we're looking at. All these wicks. Has this been pretty clear as far as what's been going on? Yeah. Did we know from this big weekly candle that this triggered off a massive downside, right? Massive sell-off. Made friends with the 50 for a couple weeks, failed it. What do you think you're looking for? The next level down. And all of this divergence is telling us, let's look at it in real, like, as we would look at it without the whole chart. Look at it. We know that's a weekly candle. Are you long or short? You're still short. There's no reason to be long when you see candles and price trading on the south side of those two metrics. Stay away from it. You're just going to get hurt, right? Just going to get your heart broken. It just doesn't, going long in here just doesn't work. Go with the flow. Let the market come to you. Make friends with, selling short and selling long, so that you can monetize the chart in any direction. And then just simply do what you're told. That's it. This is the, I hate showing this chart, feel sorry for it almost. This is the Aster chart, and it just hasn't been able to get out of its own way. It's not a lot of trading here because it's a relatively new issue, but you can see what I mean. It's just not showing us that it has. There's the 500-day moving average starting to show itself on that time frame. So that just gives you a target to the upside eventually. But yeah, like, look, it just hits some resistance, fails. Tries again, fails, and so forth. And you'll look at your volume profile, and now comparative to that other time frame, here you are with all of that light trading beneath you. So if you can get into this, then price can move. And it will be drawn to these other levels, right? Not all in one candle, but over time. And I think that's what frustrates a lot of you. It's the over time part that you struggle with sometimes. Okay. Let's look at Lilly. So I'm switching gears on you. I'm going to a stock now. And this is the 4-hour chart of Eli Lilly. And I like this chart simply because of how clean and smooth it trades. And if you can take away anything, this is the kind of price action that I really like. It doesn't matter what the asset is, but this kind of stuff, I really like this. And, there's a history of here that it doesn't trade overly volatile. But the 4-hour, you're waiting to see what it's going to tell you on that daily, right? We're always looking to the 4-hour because it sometimes gives us clues of what we might find on the daily chart. And actually, they look almost the same. So what are we doing here? We're waiting to see if price has what it takes to test the 20. And we haven't produced a buy signal yet. Is this just the first wave down? Handful of green candles to the upside that test anticipated levels and fail, and then you roll over it, take out the previous wave's low, fall into this gap. All of this is light trading, and then somehow, lo and behold, you find the 50. That's the downside risk on the daily. Obviously, on the upside, you take out the 20, and then you start looking at those highs. On the weekly, however, is that still, we still consider this bullish, right? We acknowledge that red candle, but this is still very bullish price action. And when you see this current candle trading above that 5 EMA, the takeaway is again, that's bullish. You see how it wicked the T-line and bounced higher? As opposed to wicking it, moving up and retracing. This one retraced to the downside, hits that level, and boom, springs right back up. That is a bullish interpretation. At least that's how I see it. And it's, when is it not bullish? Well, when we start trading below here, or we drag the 5 EMA down through the T-line to change the trend. So this is a weekly chart, so this has been a considerable amount of time. But I love how smooth it's traded. And it gets like green candles at the 50. I love this stuff. Support at the 20, right? And then you get a continuation. We show this all the time, and this is just kind of the ebb and flow of the market. When you see that support at the 20, that's a positive thing, right? Yeah. Price moved big time to the upside. I don't like this. I don't like this particular candle, but that's what we're waiting for, to see if this is just a wave down, slight retracement, and then pull back again, showing this to be just the first wave down, or does it break out, and so on and so forth. But it's a clean chart. I love how this thing trades. Let's look at D-Wave, which is QBTS. So this is the daily chart. This is a stock that's had a really nice run. And this is the kind of thing, and I'm sure a lot of you have felt this before, it doesn't have to be a stock that you'd be trading, but you feel like you've had a great trade and you feel like you can do no wrong. So, you'll let it retrace with that positive mental attitude that it's just going to continue eventually to be fine. Sometimes it is, sometimes it isn't. What you're seeing here, though, is a very identifiable breakdown. This test of the 50 is really important, because if it can't break out here, it'll pull back, fall into this gap, and there's the point of control, right? Price is drawn to the point of control. We can show all kinds of charts that just look like they could do no wrong, and then they tripped and fell, and somehow fell all the way back to the point of control, where buyers and sellers have shaken hands in the past, because that's where all the concentration was to hold them up as they're falling. So this chart, break the 20, hey, you're going to have a lot of fun pecking away at the upside. But if you roll over, fall into this gap, you're going to be talking about a slightly different outcome. And if we look at the weekly, you really have to be able to get, again, look how true the 50's been. Broke it here a bit, but boom, price took off. You could print a sell signal on the weekly when you look at the weekly chart. Interesting. But I do want to see how this plays out, because if you fail this, ugly city, right? So, and look at this level of structure. Like, this is what we look for. Let's just drop a level in here. Yeah, something like this. Just price being in the same neighborhoods that it's been before. That's all. If it rolls over, probably want to come back here. Keeps moving, you're going to make new highs. Or at least attempts to. And you'll be able to tell when price doesn't feel like moving higher anymore, because it'll be quite evident. It'll show you. Let's look at B&B. Look at the daily, and B&B had a tremendous run, like a lot of things did, but also a very clear look at what happens. So, are you trading above everything? Yes, that's all support. But eventually the support, when you retest it, doesn't hold, and you start to fail these levels and come back to them and retest them, and sometimes you don't hold. There was your, oh, there's two. There's another sell signal, and where does it come? Right at resistance. You can anticipate those things almost to the penny sometimes. Look where you fail here, right at resistance. But now you've got all that was support is now resistance, and price reacts differently to it. And you have to change your mindset, because if you continue to think that price just wants to pop higher all the time, the trades will not have long lives. This is the 200 MA on the daily for BNB. Is it critical that it holds it? Absolutely. Do I like to see a sell signal at the 200? No, I do not. Let's look at the weekly. Okay. Pretty clear, isn't it, what's happening here? Big move down, a handful of candles that retrace higher, but they are unable to break meaningfully above the T-line or the 5 EMA. Wicked pullback, wicked pullback. And the pullbacks come below the 5 EMA. Right, so we know that when we're trading below it, we're bearish, and all of this stuff maintains its bearishness. What is this starting to look like? Is this not the failed breakout to come back and take out those previous waves lows? Ultimately, probably looking for the 50 MA. And you would hope, you came back and tested it here and got support. So it isn't really necessarily the first touch, which means there is a chance that it could fail. The first touches get the majority of the support. Well, we've already had that. So depending on how much momentum is in this move down, which we can see is significant, we may come back and tag it. We don't necessarily stay there. We don't necessarily hold it, but we're going to come back and tag it. And the only thing that's going to change that is a bunch of more money that comes in and reverses the trend to the upside. I'm going to look at NVIDIA quick, and if there's another symbol that you want to look at, you just tell me. This, I want to go to the daily. Okay. Let this chart load. So it wouldn't matter if this was Bitcoin, it wouldn't matter if it was Ethereum, BNB, a chart for oil. The way that we look at these charts and interpret them is the same, right? We apply the same rules all the time. And, sometimes charts are cleaner than other charts. Sometimes they're a little noisier. But the methodology doesn't change. And, you can see as rastered as all this looks, it's just representing all the volatility. But the trend was down. But what I want to point out here is this green candle. And that was on Monday. Is that the first touch of the 50-day moving average? Yes. Since you broke it in here. First touch. So those first touches have a higher probability of failing. Now, yesterday, the day before, I can't quite remember, maybe someone will correct me, but I believe there was news on NVIDIA about chips and having the ability to sell them to other countries and all this kind of stuff. And that kind of news gets the market excited. Just go into a space or an X space at night, you'll hear it, right? Everybody talking about, how great this is going to be. Sometimes it is. But I don't listen to that stuff. Pay no attention. I'm only focusing on what I'm seeing on the chart. So as other people are like, hey, you know what? This is super bullish. Well, we're not the first people to have an opportunity to digest information as it comes out. The smart money always has that opportunity long before we do. And when you see I see this candle with a wick of the 50 on a daily, and it fails it and pulls back, it gets my attention. Because what we were really seeing is the beginning of what I believe is a failed breakout. First touches have a higher probability of failure. So, do we long into resistance as a rule? No. Why? This is why. So, again, mindset change. If we've programmed to go long, 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 and then all of a sudden, when you're dealing with repeated resistance, and you're like, damn it, why doesn't it just want to bounce? Well, you're in a different period, right? You're in a different trend. The environment's different. It may not last forever, but it is what it is today, or this week, or this month. I'm only worried about what I see on the chart. Right? I only care about what price does, not what people say. And it doesn't matter who says it. I have beliefs too. But if I see price on a chart that's contradictory to my beliefs, I'm taking the chart every time. There's the 4 hour, because we like 4-hour charts. I do. Look at that. Look at that wick on the 4 hour. First touch on the 4 hour as well. And this. And you're at the upper value range. And. The chart will tell you everything we need to know. Now, if we spread this out to the weekly, we finally have a weekly sell signal. What happens if we can't break this 20 to the upside? This is now, what was once support, is now resistance. Let me just blow this up a little bit. This divergence is starting to open up, which is expressing momentum to the downside. Does this help? This big gap here on the weekly? And I like weekly charts now because they take a lot of the daily and intraday noise, being a little more truthful for trend. This breakdown falls into this gap, then you're going to find the 50. And is it unreasonable to think that? No, it's been there before. Here's some tops it might want to kiss. Is it unreasonable for a stock or any equity whatsoever to come back to a 200-day moving average on a weekly chart? Is that unheard of? No, not at all. But what's been happening repeatedly in various different asset categories over the last 15 years is that you've had this parabolic move to the upside. Right? Well, we show you on short time frames what happens when you fan out all of these averages and come back and revisit them. Like we can show you, like the ETH chart we looked at was really pretty, right? All the way back. We see it all the time. We see it in commodities too. So why is it crazy to think that we can't do that in the stock market? Of course we can. And eventually we will come back and start to tag all these kind of levels. And test them again and again and again. And do you remember on how, I think it was the ETH chart on the daily, it looked like, for a little while we kind of went sideways with a slow grind to the downside, a little bit of lower tops. Look familiar? Major moving averages starting to come together and twist. Right, that's more of a sign of price averaging within a range. And eventually, we're going to come back and do that. But you guys won't be surprised. You'll be like, oh my God, it feels terrible, but wow, that's only the 200. So because we went parabolic, that's why it feels this way. But it is just completely sound and normal to have these retests. So what we have seen in crypto and feel like you've taken it on the chin, eventually come back, and we'll do it in other markets too. We can't fight it. Whoops. hopefully you can see this chart here. This is our monthly oil chart. The monthly. We've talked about it before. Are we still in a downtrend on the monthly? Yes. Like, look at, we've broken all of our, which was once support, is now resistance. Except for one. It's a 500 MA monthly. That's decades of price support. That's what it represents. So when you have our metric telling you that you're in a downtrend, you're in a downtrend, whatever the time frame is. What are these three candles? They're just retracements in a continued downtrend. Roll over, take out the previous wave low, which you've done, and here we are. Like, what we're seeing on the chart on a monthly is not unrealistic. It's not. Its price is telling us what it's doing. It's pretty clear. It's just looking for past price. Right? That's all it's doing. It's just looking for past price. And eventually it finds it. CFX. Sorry, Solana. This is another chart that we've spent a fair amount of time on to try and show what happens when we break certain levels. So this is, this is the hallelujah thing, right? Fanning out all of these averages because price is going nowhere but up. Nothing goes straight up and nothing goes straight down. Eventually you come back and start to test levels. The train tracks, the equal bottoms and equal tops, there's an example. Where do they come? Right in and around the point of control. And you bounce higher. Lower highs. So, for a lot of traders, as soon as you start making lower highs, they're looking for ways to go short. It doesn't take them long. Were they wrong? No. Did they know this was coming? No. But they understand that when they see this type of pattern, it typically means that, hey, maybe we're fading. So all you did is big impulse down, retracement candles, but they fail. They don't take out that high, create a lower one, and so on and so on. It's just a matter of these lower highs. As long as you're trading on the south side of all of this, there's no point in going long unless you're looking for a quick trade. What does it mean? You've got this impulse down and then you go sideways, unable to break out through the T-line and or the 5 EMA. What's the takeaway? Bearish. Right? What we're looking for are one of these four candles, which by the way make up a month, to show us something where they want to test these levels and move higher. But they're not doing that. You have this impulse down and you've gone sideways, just wicks testing and then running away, creating these dojis. That's not bullish, that's bearish. You need a candle to start to, you need price to start to push through these levels with momentum. And you can see all of this, how it expanded and got, heavier and heavier. That's just an expression of that momentum to the downside. And these four candles have been unable to change that at all. And we show this again on all these different time frames. Doesn't matter because everything's fractal. What happens on one time frame will happen on another. So that's a little concerning, right? Big impulse down and then just a bunch of wicks being pushed down. You gotta get price to want to move higher with enough momentum to change this trend, and that means pulling that 5 EMA up through there and a few other things. But this is just Not helpful at all. What are you doing? Failing the 20 on the daily. Little Bart Simpson top here, right? Can't really break. Look at these levels. That's structural, and you can't break that. Another rejection. This is far from over. What's a little concerning is that this move to the downside hasn't really shown the recovery. This is an example of it, like big move down, and that's not a recovery, is it? Is that the V-shaped recovery that people are always thinking they're going to get? That's not it. And again, we're not trying to be negative. We're just simply trying to demonstrate how price reacts at certain levels under certain conditions. And it doesn't matter what it is. Here's Apple's chart. This is the daily with the volume profile. There's your kind of light trading. And there's your sell signal. That was yesterday. If you hold the 20, like you did here, and so on, hey, maybe you just continue on and you'll go up and then take out these highs. But if you roll over, then you come back and take out the previous wave's lows. And that puts you in and around the neighborhood of the 50, which is what you would expect. Break the 20, chances are you're going to find the 50. You see these gaps in this light trading, pay attention to those. Because if price starts to fall, breaking the 20 and looking for the 50, and then it somehow starts to find its way into these gaps, that can lead, momentum to the downside. You could also bounce right in a gap and move higher too. So those are the other things you need to be aware of. But the takeaway is that price moves really quickly in those gaps. Knowing that the draw, as soon as you break one level, then you look for the next, the draw is always to the downside until the money comes in and reverses that trend. Right? Where do you see it? You'll see it on the shorter time frames. That's where we pick up. Look at this. So if you were trading this is another example of a doji that, like we showed on the previous chart, at the top of a move higher. In the 4 hour, I'm always using to try and give me a little bit of a cheater entry on the daily. Right? That doji is an automatic. Look at me. There's the signal. So you either take the signal or you could have taken it early, but the 4 hour is still bearish. As long as this divergence is in place, you're still bearish. And we show it, and this would be an example to the upside. As long as it's diverging and higher, you're still in the trade. It's when it does this kind of stuff that it changes. But it's telling us that this is still a bearish 4 hour chart. And what did NVIDIA look like on the 4 hour? Oh yeah, there's your failure again of the 50. These are the things, again, that get your attention. And initially, you're not going to be super confident to act on them all, right? You're going to maybe think you're going to wait for the signal, and that's fine. But over time, you'll get really good when you see a wick like this. You'll feel much more comfortable using that as a short entry, especially after a failure. But that just takes time, and allow yourself the time to go through the ebb and flow of how these charts move, whatever it is that you're trading. This is strategy or MicroStrategy, whatever the heck they call themselves. We look at it every week because we've got some benchmarks here that we want to try and keep tabs on. One of them, just go to the weekly, take out some noise, was this. Why did we circle that? We circled it because we believed that as price was falling, it was going to look for where it had been before, which was in here. And it found it. Is there divergence on the weekly still between the T line and the 5 EMA? Yes. Did you kind of test, test the 5 wick and pull back? Yep. Is that bullish or bearish? Bearish. There's the 200 on the weekly. Does that feel like an appropriate level that it might want to tag? Yeah. And on the daily, it's this. It's 1,000 MA. So that 200 that we looked at on the weekly, on the daily, was 1,000 days. And I just kind of drew a quick line here just to try and extend it for an example. And here you see, where are you finding resistance? At the 20. Don't long into resistance, damn it. Please, wait. Like, I don't get it. Like, do you not have another couple hours of life in air? Like, to make sure that this is going to be a good trade? Yeah, you got a signal. But as soon as you get, as soon as you get stopped out, you'd probably have a level in here, maybe? In here? As soon as you start to roll over like that, it's not. You might be thinking it's not going to work. Pay attention to anything that happens at resistance. Always use caution logging into resistance. Especially the first attempt, because you're more inclined to fail. People do it over and over and over again. It's like that one mistake that everybody wants to make repeatedly is longing into resistance. This is Google's daily chart. Now, obviously an example of a chart that's gone parabolic because it's fanned out all your averages, creating targets on the way down. And again, you're trading above everything supportive, which is fine. But eventually you're going to come back and retag this 20, which it's done many times before and gotten continuations from. So what you're looking at here, and this kind of sideways price action is, it could just be a matter of time and price waiting to tag each other, and then you hit the 20 and price pops again. Or is it the breakdown where you start to test these lower levels? We don't want to think it can happen. Nobody wants to think it can happen. But it can happen, right? Just like that. And I know I'm comparing, crypto and stocks, and to me it doesn't matter. To some of you it might. But it's just what price can do under the right conditions. Break everything, completely round trip back to, where it started. And then just the simple rules that we apply over and over again, like breaking the 50 is never a good thing, and now retesting and failing and retesting and failing. Seeing this kind of price action at the 50-day moving average on any time frame. Just pay attention. Right? Don't front run the chart. That's not the job. Just pay attention to kind of mastering the time frames that you want to trade. Right? Don't use too much juice. Everybody wants to hit the home run, I get it. Right? But take the foot off the gas a little bit. And when you do, I'm going to go to Bitcoin again. Just be patient. All right? This is not the kind of market that you guys want to make mistakes in. So just be patient. Right? If you're trying to monitor more than a handful of tickers, it's going to get challenging. Right? So, if you're trying to look at opportunities within 10, scale it like right back down to 4 or 5, so that you can spend all your time watching a few things really closely. And I'll just use Bitcoin as the example. Right? So this is our 4-hour chart. This was failing, the 500, the 200, and the 1,000-day moving average up here. So that's the top of a range, right? Because that's your time. That's the top. and you came right back to the bottom of a range. And now you're trying to peck away level by level. And just because you break one and find the next to the upside doesn't mean you're going to continue to do that. Just like when you're falling to the downside, eventually you might continue the reversal again. And those things happen at particular places. We talked about this earlier in the week. Pay attention to the 4-hour 200-day moving average. Why? Because it's kissed this upper value range and pulled back, and it can't seem to close above it, right, with the exception of that one candle. So this is what you have to do. Pay attention to those other time frames. The fractal stuff's really important. And again, don't trade too much, because you're never going to be able to follow it effectively. Get really good at a handful of things. Get to know the Bitcoin 4-hour, daily, weekly, really well, right? The weekly, you're going to understand that, hey, you're going to want to pull back if the down continues to around 84.2. You've already tried to probe the upside of this candle, and it wanted nothing to do with it. Does it make sense to be, to still be short? Yeah. Because you're still in a downtrend. Even though you've had 3 green candles, you're still in a downtrend. And if you wait, we often talk about if you're in a downtrend and you've been bounced out or you exited and you're thinking you want to re-enter the short again, in this case, you could wait for price to get up into the T-line range and prove that it doesn't want anything to do with it, and then re-enter that short. Because it's kind of telling you that as long as that divergence between those two levels is there, you're safe, and that's just a test and fail, which you expect after a big move down. So, and it's just rinse, repeat, rinse, repeat, rinse, repeat. Let's look at gold. Remember, gold was dead. Didn't you get the memo? Sell all your gold. Go buy Bitcoin. The chart told us way back here, again, you're coming out of some consolidation, right? Going back to August of this year. And price, green candles at the 50 and a signal, boom. I love that stuff. And price went nowhere but up. Did it capitulate? No. Got support. Now it's kind of testing, or wants to test, those highs. And if we look at the weekly, this pullback that we showed on the daily that looked frightening, this in here, when you look at it on a weekly, is absolutely nothing. Right? And this is how you're able to kind of manage your brain in the midst of a trade that you're in. Because when you catch a runner, you want it to run. This helps us determine whether or not we can let it run. Right? If the chart's in our favor, then we let her run. It's as simple or as complicated as that. Here's support off the 20. None of this divergence broke. Price just continued to move higher. I know it sounds simple, but just follow. Just follow it. Look what you're doing. How we show how you roll over and take out the previous wave's low. Well, this is how you bounce and take out the previous wave's high. And it's still a very bullish chart, regardless of what other people say, because we're only concerned about what price is doing, not what people are saying. It's as simple or as complicated as that. This is still a long. You know what the downside risk is. You know that eventually you're going to want to, the horse doesn't like to be too far away from the barn, just like here, and it came back. Time and price came together and it found the 20. The same thing will go on eventually up here. One day it won't hold and we start this whole process to the downside. But the reasons why and all that other stuff, they're irrelevant. We don't care. Doesn't matter why. The only thing that matters is that you can monetize the chart. That's it. we have a tendency to make things far too complicated for ourselves, and it's not necessary. Let's look at United Healthcare. It's got a bid today. There's your daily chart. Testing the 50-day moving average. Has price, let me just blow this up a little bit, there you go. Has it kind of shown that it's a little bit allergic to the 50 so far? Yeah. So this is a real interesting candle, right? This could be a candle that breaks out, or it's going to get another rejection at the 50, and then it will kind of come back and retest again. Upside opportunity, you look at these past highs from that consolidation over here, and the 200, which is aligned perfectly. Doesn't matter the asset, the process is still the same. Here's your weekly UNH. You haven't produced a buy signal yet on the weekly, but when you do, what's your resistance? This level here, that's the 500 MA and the 50 weekly. The point of control is, in this shelf here, because it's representing the bulk of trading. And then you got this big gap, and this is what you're going to look for. So if you're long, eventually, with your fingers crossed, you want to start to print a signal. You've had nice support here on the 20, right? So if you're long, you want to break this, chip away at this, but you really want to get into this gap, because if you can get into this gap, price can really move to the upside quickly, and that puts the 200 and the upper value range in play if it can work its way up there. And your bias, which there should be none, but I mean what you think of this company doesn't really matter. It's just a chart. It's just, I have one job, and that's to monetize the chart. That's it. Here's a chart for Boeing. It's doesn't really matter what's gone on with it. I believe back here is when things were falling out of the sky, right? But can you not trade? Let's take the noise out. Let's stretch to the weekly. Can you not trade these big moves, these swings? Yeah, these are nice swings. And where do they find resistance? Like, see how you've framed in a range? That's what the benefit of using these long-term averages can do. They can help you frame in a range. Love this stuff. It doesn't matter who you are or where you come from. You can do this. Anybody can do this. I've seen little old men and women, like retired couples in their 70s and 80s, learn this stuff for the first time. I've seen I've been with teenagers who are learning. I teach them. The seniors are the most fun. Anybody can do this. All you have to be able to do is understand a handful of things to be able to allow yourself to be guided around the chart. That's really it. Just kind of the ebb and flows of what you see on a chart at any given time. Anybody can do this kind of stuff. Take long-term charts and signal trade. It's super easy to do. Sometimes maybe you get stopped out or the trade doesn't work out the way that you thought it would. But we've increased the probabilities of helping you do that. And again, all you have to do is follow the chart. I struggled when I first started learning because I wasn't willing to to just allow the chart to guide me. I thought that I had my own understanding and reasons for believing that price was going to do something. And then I got in the position of front running things, right, out of belief, only to find out later that's really not in my best interest, right? So ultimately, you have to find a way to trust the chart. I know it's hard to do sometimes, but you have to find a way to trust the chart. This is Amazon's weekly chart. It has ugly moments, but was the trend higher? Yeah. Kind of still is. But you're trading, like all these stocks that are trading on weekly charts that have all this grayed out density here, which is all light with volume gaps, like it's only a matter of time before they come back and test those levels and start to fall into them. And I think there'll be opportunities created for traders when it does happen. But it's not exactly a pretty chart, but it's still a bullish chart, right? It's trading above the 20, it's trading above the 50, and it's trading above the 200. Does it have downside risk? Absolutely. Christmas time will probably tell a little bit of a tale for Amazon, like a lot of other retailers. USD JPY. United States dollar, Japanese yen. Price just can't, look, broke our trend line a little bit, but here it is. Doesn't want anything to do with this upper value range. Still bullish? Yes. All that divergence is telling you that it is. But when there is that bullishness moving forward, just always be looking over your shoulder to make sure that you don't get hit by something you didn't see coming. And that's where you're using your fractals. Right? Whether you're trying to jump an entry on a daily chart, on the 4-hour, or you're looking for an exit opportunity, right? Like daily charts are, look at this, right at the upper value range, and then pulls back, breaks one level, finds the next, breaks that level, finds the next. Is this a higher low? Yes. So that's encouraging. You're getting support at the 200 while you're making a higher low. Maybe if you can get past the 200 or the 50 and get past the T line, right? Because those are the levels you're going to have to test to break out. That higher low on the move higher, maybe that creates a higher high now, right? This is just the evolution of how price moves. If you fail this, like if this was to turn out to fail this level or anything in this level, then the price rolls over and then comes back. And again, time frame doesn't matter. But you gotta like higher lows rather, and you're getting support from the 200, which is the basic bull bear indicator on any time frame that you're working off of. On the daily chart, you don't like failing the 20, because now you're in play to find the 50. Don't hold it. So is this the first touch? Yep. So you would expect to get some support and or a bounce. If you don't, well then you know what happens next. All of these things know what happens next. It doesn't matter which one. Getting support from the 20 on this daily, even though you continue to fail this level, is positive, but it's still bearish, I guess. And that's what we're kind of looking at today. The stock market is going in two different directions. You got the Dow. Get rid of the volume profile. There we go. Dow wants to go straight up. And then we got the NASDAQ. That's not quite as excited. Sometimes you get a little bit of that divergence. We'll see if it means anything. But the Dow's up 6 and change. The Dow being price weighted, the other two being market cap weighted. If you fail, still bullish, right? And all this divergence means it's bullish, but you obviously have to hold above the T line here. But if it does roll over, you come back to the 20 and the 50 that have kind of twisted together, and we've got a level in here where obviously we can connect some tops and bottoms, right? Just like we showed on this Bitcoin chart, it means something when you can do that. I know this looks busy, but we've been using it for demonstration, but it means something, right? Price, it's not an accident that price is finding resistance here, support and resistance here, because it created this level way back here and in through here. And as all we did was throw this level down with the anticipation and expectation that at some point it would prove to be a relevant level again, and it will help us as we're trying to determine what to do on the chart. We don't know if we're going to interpret it as a support level, or in this case as a resistance level, when we have to make that decision. We don't know when we drop it down, but we know we're going to see it again. There's a strong likelihood of it. And here we are. Okay, so if there isn't anything else, or if there's no other questions, we'll pack this one up for today, and we will come back on Tuesday of next week and see where we are. This is just a real crazy bit of price action here, and let's let's see if we hold the 20. If we don't, I'm afraid that this thing could get a little on the selly side for a bit. If we hold it, well, you can see what the upside opportunity is, but I just don't like this repeated failure of this level. Break through, and you can see, you know, that's the attraction. If you can get through there to the upside, it'll move quick, but the downside is not as pretty. It starts to bring you into the 80s again, lower 80s. Right, so, on that note, we will come back on Tuesday and see where we're at. And if you guys need to reach out, you know where to get me. So have a great weekend, everyone. Happy trading, and we will see you on Tuesday.